The final 2 hours of what has been a forgettable trading week for our markets. You're watching Midcap Radar. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. It's not been a good afternoon. It's not been a good week. And the screen is very evident of that.
That's right. Good afternoon, Hormas. Barring a miracle, I don't expect us to end in the green today. We're down 0.7%. All indices in the red, as you just saw on the top of your screen. Well, we have a lot lined up on the show. Some important stocks too that we will be tracking. So let's start off with the top headlines. Stocks take a beating with mid-caps bearing the brunt after Trump unveils a fresh set of tariffs, adding further uncertainty to global trade. Pharma, IT and metals are the big drags. Realty bucks the trend. Mid-caps drag.
Pharma stocks, large cap, mid cap, small cap, all of them are under pressure. Donald Trump has announced a slew of new tariffs, the most significant being a 100% levy on patented and branded drugs not manufactured in the US, while India's generic industry will see no impact.
Vodafone Idea under pressure after the Apex Court defers hearing on the AGR matter to October 6th. Solicitor General seeks more time on behalf of the Department of Telecom.
RailTel is in focus after it has received the letter of award for 970 crore rupee worth of orders from the Bihar Education Project Council. The company has also received an order to establish physics, chemistry and biology labs.
Microfinance institutions in focus after a Motilal Oswal note. The brokerage firm says the industry is experiencing a directional improvement as they expect a more meaningful earnings recovery to materialize only from Q4 FY26.
Boy, if you're a bull, look away from your screens because the losses have only gone from bad to worse in the last few minutes, and every single intraday recovery that the Nifty has seen so far has been very, very swiftly sold into. Same was the case in yesterday's trade. Same is the case in today's trade as well. We are now below the 20 DMA. We are now also very, very convincingly below the 61.8% retracement support of a 24,800 as well. In fact, 24,700 is now under threat of being broken on the Nifty. And also to know the fact that from the lows that we had at the start of this month, which was 24,400 till the 1,000-point rally, we have lost almost 3/4 of that already. The broader markets are no different. The mid-cap index also at the lowest point of the day, now 1.75% lower on the mid-cap index as well. It's a 1,000-point cut over here. And the other, of course, is the small-cap index, of course, trading with losses of a similar quantum, if not more. And it's been read across the screen for the broader markets as well, 2% lower on the small cap index. But is there a pocket that is in the green in this sea of red? Vivek has hopped across to the wall. He'll tell us just that. Vivek.
Well, finding a pin in a haystack, that was how tough it was to actually go ahead and find some green on the screen today, given the kind of advanced decline ratio. It's very, very big. Like you mentioned, the small cap index down over 2%, and clearly more stocks in the red than in the green. A couple of stocks do stand out. Tata Investment Corporation, that particular stock yesterday was significantly lower. Today has recovered and it's resumed the upward momentum that it was seeing. The other stock on the radar is Jupiter Wagons, this particular stock amongst the top NSE 500 gainers. Writes a couple of order wins for this particular railway-based company as well. That stock higher by 1%. And Supreme Industries, an initiating coverage note coming in from JM Financial. That stock higher by over 1%. Few stocks very few and far between, you're actually seeing stocks in the green today. On the other hand, the entire pharma pack, while most of the pharma stocks are under pressure, we are focusing on the CDMO space. All of the CDMO stocks under significant pressure, down anywhere between 3%, and Laurus Labs down to the extent of 7%. The other set of stocks are continuously under pressure the entire week is actually the IT pack. Today, the entire mid-cap IT basket, Persistent, HCL, all of these stocks down anywhere between 2 to 4%. And a few more stocks in the broader end of the market that are witnessing significant pressure. Have a look at names like Idea, Polymedicure, a stock that did quite well yesterday, Ratnamati Metals, Hind Copper. It's been on a significant upward momentum throughout the last couple of weeks today, taking a bit of a breather. And have a look at HFCL, that particular stock lower by over 5% today.
Out of the FNO ban today is HFCL, seeing some bit of repercussions of that as well. Vivek, thank you for that update. In fact, tomorrow is the 27th of September, and tomorrow was the day in 2024 when the Nifty had made a record high, 26,277. and since then returns in the negative. Hemen Kapadia of DR Choksi Finserv is joining in for a quick chart check. Hemen, good afternoon. Thank you for joining in. Well, they are talking about all sorts of supports, 25,000, 24,850, 24,800, all of them taken out now. Where do you find now? Where you still go down to 24,400 yet again? What's your call on the index and specific stocks as well?
Very good afternoon to you, Thomas. Thank you for having me on the show. It's anything but good for the market. But like you said, most of the levels have been gone. I mean, it's like hot knife slicing through butter. I mean, there is absolutely no respite. There were three upward gaps. One would have thought the first two could get covered up. The latter two get covered up. The first doesn't. That gets covered up. And now today we are seeing a bearish gap. So it's been a one-way ride up, one-way ride down. Frankly speaking, the VIX today has gone up, but it was sub 11. So, I mean, normally you wouldn't warrant such a big fall on a VIX which is sanguine. It's not on a tear at 14, 15, 16 or something. So defies logic. Having said that, 24,792 was an important level, which is gone. And like you said, there is little bit at 24,600, but the level to watch is 24,492. So I guess we are heading towards that 24,400 level that you mentioned initially in your starting statement, Hormuz. So nothing good, like you said. IT is weak. I mean, it's all over the place, frankly speaking. There's an exception like maybe a Larsen and Toubro, and very few things far between.
Absolutely right, Hemen. Very tough to find any specks of green in the market today. But are you being a braveheart today afternoon? Any buy calls from your side, or are you mostly sticking to sell calls?
I wish I could run away and hide, Vivek, and anything. But honestly speaking, on a serious note, Larsen looks good, but it's not broken out. It's been here for 17 months. So will giving a recommendation at this point in time work? I don't quite think so, because I mean, we've been here for ages. So a couple of calls, but these are shorter term calls. One would have to be nimble, because the way it's gone, it takes support, it could bounce back. But having said that, two sell calls. Firstly, a sell call on Cummins at 3950, stop loss 4,000, target 3850. Secondly is a sell call on HDFC AMC. One can sell HDFC AMC at around 5,700, stop loss 5,800, target 5,500. Overbought, negative divergences, crossover sales, double top, weakness on the weekly charts. I mean, the whole market is that way. But yeah, there is significant weakness technically on the daily and weekly. Cummins is more of a weekly weakness, daily weakness.
If only is a very wonderful statement to use if you could, Hemen. But thank you for sparing time and joining us with your views on the index and on specific stocks as well. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Gaurav joins us. There's an interesting report from Motilal Oswal as far as the MFI names are concerned. Gaurav, take us through the report.
Well, yes, when we talk about the MFI segment, we have already seen some stress which was built up. But now Motilal Oswal is saying is that they are expecting some kind of directional improvement, although the improvement is a little bit slower than what it was expected earlier in first quarter of FY26. What they have highlighted is that over-leveraging was an issue, but at the same time, some specific state-related issues like Karnataka and Tamil Nadu that added a bit of a more time to the recovery. At the same time, when we talk about flood situation, we have already seen states like Punjab and Jharkhand who got impacted, but they believe it is going to be a seasonal impact and it will get contained within 2 to 3 weeks. What they've highlighted is that state like Assam, where they are seeing high-ticket loans and customers' ability to pay those high-ticket loans are a bit low, and that is the reason they have shown some kind of concerns. But when it comes to the overall growth trajectory, they believe that second half of FY26 is where we will see some kind of growth. Remember, the industry has actually degrown almost by 19%. If we compare it with March 24 numbers, it has degrown to around 3.5 lakh crores of total loans. At the same time, they believe that the worst of MFI cycle is behind us now, and industry is set for gradual recovery. When it comes to the credit cost, legacy stress is going to keep the credit cost elevated, but we will see some kind of improvement in fourth quarter of FY26 or in FY27. With this, they have also given some stock calls. They have actually upgraded rating for Fusion Finance to buy because currently the valuations are attractive. They are reiterating buy rating for Credac because they believe that although the valuations are high, the recovery for Credac is going to be higher than the industry. And they have downgraded rating for Spandana Spurti to neutral because they believe that the recovery is going to be slow and there are near-term catalysts which are missing, and that is the reason why they are a little pessimistic about Spandana Spurti. So definitely watching on the entire space as well as these three stocks that they have highlighted in their report.
Now looking to latch on to any bits of positives at the moment. Gaurav, thank you for that update. Some expectations of improvement from the MFI space. There's one pocket that has been in the news recently, you don't talk about it very often, is the pipes space, and JM Financial has initiated coverage on this today. Ria is joining in with more from what they have to say on these pipe stocks. Ria.
Well, yes, almost JM Financial has initiated coverage on the pipe sector. First, they've talked about Supreme Industries. They have a buy call on the stock with a target price of rupees 5,400. The capacity for Supreme Industries is set to cross around 1 million tons by FY26, which will be aided by the recent acquisitions that the company has made that will expand technology as well as the regional reach for them. The management has also guided for 15 to 17% growth in the piping volumes in FY26. They are also expecting strong operating cash flow around 50 billion rupees over the next 3 financial years, and the company is also targeting sector leading capex of around 2,900 crores over the next 3 financial years, and this is without any financial strain to the company, so they have a positive view on this one. For Astral, they have an ad rating with a target price of rupees 1,600, saying that the company continues to strengthen its CPVC franchise through backward integration into resin. The adhesives business of the company, which constitutes around 22 to 23% of the revenue, is expected to deliver healthy growth in India, and corrective measures are also underway in the UK operations. Although the company does have some lower utilization in the bathware segment, and there is intense competition in the paint segments as well, and this remains a challenge for the company in the near term. Going forward, they are expecting an 18% EPS CAGR over the next 3 financial years with limited capex commitments, and this is poised to generate around 1,900 crores of FCF over the next 3 financial years, which is 2x of the prior 4 years, and this will also enable net cash to rise by around 4 times. Over the next 3 financial years. Coming to Prince Pipes and Fittings, they have an ad rating on this one as well with a target price of rupees 360. The company is repositioning itself as an integrated water solutions provider by scaling their bathware and water tank adjacency segment alongside its core pipes business. However, the volume for this company has lagged over FY20 to 25. They have a 6% CAGR versus just around 11 to 12% for the leaders in this segment. Margins have also declined. EBITDA margins have come down to around 6% versus 14% earlier. Return ratios have also declined from around over 20% to just about 3%. Going forward, the volume is expected to grow by around 9% CAGR over the next 3 financial years. So positive view on the pipes space coming in from JM Financial.
Thank you so much, Ria, for joining us and taking us through the details of the JM Financial note as far as the entire pipe space is concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Twenty-four 700 taken out, and decisively at that on the index. Now then it's a significant fall from for the Nifty, now over 200 points down on the index. The weekly losses now have gone up to 2.5% on the Nifty, which is turning out to be the worst week that the index has had since March of this year. So it's turning out to be the worst week in nearly 7 months for the Nifty. The similar story playing out for the Nifty Bank as well. It had closed below the 55,000 mark yesterday itself, and since then the losses continue to mount for that index as well, even below the support level of 54,500 that we had highlighted earlier in the morning, below that level as well on the Nifty Bank. But on the sidelines of the Branded Residences Summit, Anil Chadda, the MD of ITC Hotels, told Shilpa that they are seeing interest from some developers and are looking to get into branded residences. He also spoke on demand amid the festive season and their guidance on the number of keys for the future. Listening.
I think it's a tremendous opportunity, if you ask me, because the movement has just begun, if you ask me, in terms of luxury living, and luxury can be at all levels. It's very personal choice of luxury. So I think in terms of what we can bring to the table is tremendous value with the developer and eventually for the home buyers, because this is a brand that has been built on trust for many years. There is a lot of work that has been done in building some great assets that we've done for hotels, and we can certainly add a lot of value in terms of building luxury. We are extremely well known when it comes to the cuisine part of it, so we can run some great club facilities. We've developed our own brand in the wellness space called the Kai Club, so you could look at that opportunity as well. And we are a sustainable chain. All our hotels, all our own properties are LEED Platinum. So there's tremendous amount of learning that we've had over the years, which can be shared with the builders. And eventually together, I think we can create a lot of value for the home buyers.
Right. So is this something that you're seriously looking at? Have you already started collaborating with developers? And do you see this trend strongly going forward, that you'll see a lot of hospitality players actively getting into branded residences?
Well, I think in the last year or two, we've certainly got a lot of interest, and that's what we are evaluating right now, because the brand has been built over the years. And what is really important is that you partner with the right developer and you build the right quality, more important than the money you make out of it.
Right.
But what is important is to create a lifetime value for the home buyers.
Right, understood. And so, now we're talking around the time of festive season, and usually around a time where we also see a lot of tourist inflow coming in the second half of the year. So how is the demand looking like currently as we speak? And are we also seeing a significant pickup in foreign tourist inflow?
Well, if you ask me, the second half traditionally is always better than the first half. We are just entering into October. We are, certainly hoping that we have a great quarter 3 and quarter 4. So the real test is now between H1 and H2.
But I mean, I just trying to understand early indicators, what they're looking at.
Early indicators are good, but the booking window has also shortened a bit.
Okay.
So as you go along, this is also the wedding season which kicks in.
Correct.
This is also the time when a lot of international movements do take place.
Correct.
So we are certainly looking forward to that.
Right. And early bookings, are they indicating that, this festive and this holiday season will be a lot better than last year?
Remember, Diwali is a festival which you normally celebrate at home, so it's not so much out of that.
But the wedding season also comes around this time.
Yeah, so wedding season is looking very good.
Yeah, in terms of advance bookings, have you seen a lot of demand?
Yes, all the hotels that we do weddings, we are certainly seeing a lot of good demand as we go along.
Right.
We also have a lot of hotels who've done some great weddings in the past, so we can see good traction out there.
Right. And so, the chairman had said that you are likely to exceed your target of 200 hotels by 2030, which could be about 220 hotels, right? And I think last year you signed about 30. How many can we expect will be commissioned in this fiscal, sir?
We are saying that we should maintain our run rate. We opened, our average was 1 hotel per month, and we'll maintain that. And that is why we set a target for ourselves, as the chairman had mentioned, and we are well on track on that to deliver that number.
Well, the Nifty now breaking below the 24,700 mark, no different for the broader markets as well. Over 1,000 points lower on the mid-cap index, the Nifty Bank below key support levels as well. And it's time to call time on this edition of Mid-Cap Radar from Vivek and me. Thank you for watching. Your stocks on the other side with the markets in the red.